Well, welcome to Scale to Exit, Tim Smith. I am so happy to have you here. You have a great experience being a certified financial advisor, and you have dedicated your whole career to helping entrepreneurs and high net worth individuals create legacy wealth. And the first thing I would like to know is like, what drives your passion into deciding to come into this journey?
Well, I think the primary things that drive it are I just love people. I love working with people. I love the sense of helping people and the feeling that you get when, someone thanks you for something that you got paid for is amazing. Um, the second thing is that I'm really intrigued by and passionate about the financial markets. So, I love following the stock market and I love what it does for investors over long periods of time. And I love trying to figure out the puzzle of, you know, getting them, getting them where they're trying to go. I think the final piece is because I also am an entrepreneur, uh, you know, creating scale, all of the challenges and the puzzles, if you will, that need solutions and solving of running a business, operating a business, improving a business. I love that challenge as well. So, it's just a confluence of things that I just happen to love doing, I think.
What is the
Yes.
biggest misconception from your perspective that you have seen that owners have when it comes to their personal finances?
So I'm typically working with some who have had a level of success that's allowed them to accumulate assets outside of their company or in their 401k plan or, that kind of thing.
Oh, they have assets. They have lots of residential.
uh, well, I think that many of them don't appreciate risk, in particular in stock market investing. And they have so much risk in their, what is effectively a very micro cap stock, right? A company from 500,000 to $100 million of revenue is a really small company by public market standards. And by that very nature, there is relatively high risk to it. So, one of the things that I see a lot of owners doing is, putting money, thinking that the stock market, that they can take any risks in the stock market and it's the same as the risk that they take in their business, but it's not. It's quite different. And, you know, perhaps in the stock market, they should be more cautious because their risk is really in their business asset. That's their risk asset. As to misconceptions, you know, I would say that, understanding your own particular business market doesn't always necessarily translate into understanding the world of Wall Street, the issuance of stocks and bonds, how markets function on a day to day basis or how they typically react to various kinds of news. So they sometimes think that they have a full grasp of economics, business, finance, etc. And they have it within their own sphere, but not necessarily within this sphere. And so, sometimes there's education that has to happen or undoing belief systems, literally, to try to get them to be more focused on what is more true, if you will, in my part of the world than in their own part of the world.
So when do you see, at what point do you see that the business owners start planning their personal financial strategy? Is it when the business is more mature or in a better place, or
Yeah.
when they're getting ready for like a liquidity transaction, which means selling the business or exiting?
Yeah. What I have often said to business owners is you're probably ready to start, funneling money out of the business when under your business plan, the needs for capital and cash flow are met. You have probably at least, 3 to 6 months of cushion. And if things go south, and any money after that you can perhaps afford to start taking out of the company, and investing on your own, buy real estate or buy stocks, bonds,
Mhm.
put into retirement plan, etc. So it's something along those lines, and that it doesn't have to be a mature business, but it's probably not a startup either. It's
Mhm.
usually, my experience is somewhere between 3 to 5 years of being in business
Mhm.
is just a cash flow driven thing, just meeting the bills and trying to grow, and rarely much of an opportunity to take much money out of the business. Hopefully, it happens before a monetizing transaction so that you've saved something other than what you have uh, in value in the company, because that's all of your assets at risk, right? If that's the case. So, but for the most part, it takes a few years to get it off the ground, and but at some point, hopefully, you're producing enough cash flow, you have enough money under your business plan to pay for your growth plan, and some money saved, some extra money still in cash after what you take out to survive an unforeseen event or a downturn. And that's probably a place where you should be safe starting to take some money out. Uh, Going back to my point I made earlier, I typically would advise a business owner who is at that kind of a phase to be more conservative with their investments and to keep them liquid and marketable, so that if something goes wrong in the near term, they are able to take the money and do something with it. Real estate, other than a private residence, a primary residence, uh, for most business owners, it wouldn't be the first thing that I would suggest they put money into, simply because it's illiquid.
So you made a really good point. So I've worked with lots of businesses, right? From like very scrappy startups all the way to 30, $35 million in revenue. Very small, which what you said at the beginning. I love that kind of level because I do very transformative work for those kind of businesses.
Hmm.
I don't like to work with big corporations. That's not my thing at all. But what I do see when I work with these businesses is that they reinvest into the business for quite some time, a little bit more than 5 years, I would say. I've worked with businesses that they've been around for like 7 years.
Mm.
And that's why I come around, right? Because I need to really help them with their financials and their operations and tighten it up and all of the good stuff. But they have assets in real estate mainly. So I like that you pointed out the liquidity part of it, because what I've seen is that is if the downturn in event, like you said, it's really hard to convert an asset into, cash like right away. It's
Yeah.
really, really hard. So what happens is that business owners have to find alternative solutions, right? Or Airbnb or whatever brings cash flow, right?
Yeah.
Into that
Payday
situation.
loan type, very high interest rate loans and things like that. Yeah.
Correct.
Yeah.
Exactly. Yes. So then I guess my point is, what would be a good strategy that you would recommend to businesses that can promote liquidity right fast? They can put their money and get some really nice return, but they can also, utilize it if any event happens.
Yeah. Well, there are investment vehicles that can give you market like returns on the upside with very little downside. So I would investigate those types of instruments. Obviously, you could do the classics like CDs or money markets, or
Mhm.
even fixed income bonds, short term bonds, things like that. Um, but there are some nice instruments available today that can give you stock market like growth without, and I don't mean with a 10-year lockup, like a 2-year window, a 3-year window, that kind of a thing, but that are also liquid, that are marketable. You can sell it tomorrow if you need it and take the money back out. So, there are vehicles for that available to people today. And, I would probably suggest something like another 6 months of potential need, be in something along those lines before you start thinking very long term, very illiquid, or
Mhm.
combination of the two.
Mhm. Well, that's a really, like, I love that you made those points. Because like I told you, I work with my audience as well. They're Main Street, middle market, and yeah, I mean, a lot of the people put more money into their business and actually invested somewhere else.
Yeah.
Um, and when
Well,
it
I
comes,
did too for a long time. I
you did,
understand.
yes, because tell me about your experience. I mean, you're a founder and owner. You get it. You've been through the trenches as well.
Yeah. I'm 40 years in business, 30 years on my own as an entrepreneur. I've been through market crashes. I've been through horrible theft by one of my salespeople,
Wow.
regulatory hell as a result of that. I've seen the good, bad, and the ugly, I guess you might say, and years when the cash flow was tremendous. So it's been a wild ride. The one thing I tell all business owners is that it's going to be a roller coaster.
Mm-hmm.
Just the notion of regular rates of growth, regular increases. Um, it's going to be much more like this kind of a thing than this kind of a thing going
Yeah.
forward.
Yeah.
And, it's critical to have the mental resiliency to be ready for that, to have the financial cushion to be ready for that. My wife said something to me pretty early on, uh, and my wife is a much better saver than I was early in my life. And I think the question was, well, why not take more and spend more when we're doing better? And she said, because you're going to need cushion for when the market's down, for when things are
Mm-hmm.
bad, for
Mm-hmm.
whenever, the bad time comes. And
Mm-hmm.
boy, was she right. My wife is right about a lot of things, and that was absolutely one of them. So, it's good to have a smart wife. Really helpful.
That's another asset you have, a smart wife. Uh-huh.
Absolutely.
Yeah, and this is you brought a really good point. So yeah, most business owners, they like to splurge, right? When things look good, they
Yes.
like to buy the nice car, and and why not? I mean, you work so hard, right, for your
Yes.
money.
Yeah.
And they ask me, it's like, why can I not do this, Alejandra? And I'm like, oh my God. I mean, like, I get it. I feel the pain. I see the pain. I'm one of them. I get it. But at the same time, your wife is right. Why not save it? Why not put it somewhere, get some in return, get it out?
Yeah.
Those kind
It's
of
not that
things.
you don't deserve it. It's just
Hmm.
that it's less prudent. That's all.
Yeah. Yeah. Correct. Correct.
That's all.
So what kind of measures can business owners incorporate into their financial strategies right now as, they're preparing for an exit, perhaps?
Well, several things that you can do. First, you should be talking to a lawyer or a tax accountant,
Mhm,
tax attorney, tax accountant about the potential ramifications of the sale or the transaction, the
mhm,
different ways of structuring it,
mhm,
a stock or an entity sale versus an asset sale,
mhm, mhm,
which might just be a customer list or something like that.
mhm,
Um, there are strategies for increasing the prospective value of the company in the short term, which you
mhm,
should be aware of. Most companies, ultimately, it comes down to some sort of a cash flow multiple.
mhm,
So, they're going to take out your earnings anyway. So, what you spend on yourself isn't as important. But being sure that you are doing things in a very scalable and efficient fashion so that you're cutting down on expenses as much as possible and generating as much revenue as possible, get
mhm,
the profit margins up for your final several years.
mhm,
So financial strategies for that, strategies for what you can do, let's say from a charitable planning standpoint, depending upon the size of your transaction. You may be in a position to utilize certain kinds of trusts that can help reduce the income taxes that would be due upon the sale of your entity.
mhm,
And at the same time, they might, leave a nice legacy in your name, a family foundation type of thing, these sorts of things that, if you look at your children and you say, listen, $3 million for each of them is more than enough. We're going to have another 5 million left over. I'd rather leave that to a foundation or something along those lines. Well, if you have any of that type of an attitude, there are some really powerful things that you can plan from a charitable standpoint, but they have to be done ahead of time. So you need to be talking to an accountant, an attorney, tax accountant, tax attorney ahead of time to understand your options and look at the various types of trusts that might be relevant to you, might fit your situation. So certainly you want to be doing that. Like, my own experience has been that the providing documentation in preparation for a sale is one of the most time-consuming parts of due diligence, and is also critical to the impression you're making on that prospective buyer at that
Mhm.
stage in the process.
Mhm.
So, if due diligence takes 90 days because it took you 3 weeks every time to find what they needed, instead of taking a month or 6 weeks, that's time that the buyer can sit back and be saying, "Gee, I don't know. There's something's rubbing the wrong way about this. Something just
Mhm.
doesn't feel right about this."
Mhm.
So certainly that is something you want to nail down. Ideally a couple of years before you get involved in a process. I think those are the key things that come to mind immediately that
Yes. So
I would want
no.
somebody to be thinking about.
No, I love that you mentioned all of those, especially that how many years it would take. Because believe it or not, business owners think that it's not going to take that long to prepare for a transaction of that nature. And it just baffles me because it not only takes a lot of time to be due diligent ready, like you just said, but also to increase the valuation of a business, right? Like if you really want to have a more return on your hard earned time, money, and all of energy, then you need to make it appealable to whoever is going to acquire this business, right?
Yes.
So that also comes into place in terms of portfolio strategies. What personal wise, you spoke about the trust, which I think is amazing. To mitigate some of the tax, right?
Yes.
But how about portfolio strategies where they can put their money after through this transaction?
Yeah. Well, portfolio strategies are always driven by a series of metrics. So, how old is the person? What income will they have, if any, following the transaction? So, for example, if you're going to work for a new employer and you'll be salaried or what have you, you may not need income from the assets from the sale as a result of that. What income from a spouse is there? So it always starts with getting the fact pattern and the age and the risk tolerance and tax brackets and things like that from the investor, and then ensuring that adequate income is being generated, that money is being set aside for kids for college, if that's going to be if you're pre-college age still, um, and making sure that you either have enough money to live out your life at a conservative rate of return on the money, or that you are figuring out how you are going to work and generate some more income slash savings so that you still have room for a comfortable retirement without, you can't assume 9% returns per year until you're 95 years old. That's not a reasonable assumption. So you got to use lower numbers, and sometimes people over project this kind of thing. So the strategies come down to A, planning, B, producing the income needed, or C, planning for how money will be saved or allowed to just compound and grow until a point in the future when you're going to stop actually working full time, and or your spouse, and then producing income at that point, along with Social Security, any pension you may have, those kinds of things. So it's just a big financial planning, financial puzzle. Um, Strategies, income production is typically from fixed income instruments. It can be from income producing real estate. Uh, Obviously, Social Security. Pensions are few and far between today, but some people do have some pension. And then growth. And growth can be, again, real estate, or it can be stock market, or other various kinds of things. I am because I typically am handling the vast majority of the money people have in their world, their entire world. Um, Things like let's just say crypto, which maybe up until recently were considered more speculative, they're either not in the portfolios or they're a very small portion of portfolios for people who are trying to be financially independent currently. I find that young people are much more, crazy is the wrong word, enthusiastic about things like crypto as a large percentage of their portfolios than older people are. And I don't think it's generational. I think it's they're just willing to take more risk because they would like a big return potentially. And crypto, those kinds of things can produce a big return. They can also produce a big loss. So you've got to be careful if you're going to round out your portfolio somehow with the stuff that's on the more speculative end of things.
I love that you said crypto because it's so true. It's widely more accepted now into portfolio funds, which I find that amazing as well, that we are here right now doing those kind of things. But I also find that interesting, like you said, I am very risk. I wouldn't say I'm in the middle, right? But I won't put all my money on crypto just because it's just like it's like gambling in a little bit, right? Like I have a little bit of money there, but not I wouldn't say all my money there.
Yeah, it's speculation.
Yes, it's
That over.
okay.
So crypto is a largely speculative type of instrument at this point. It has not been fully adopted worldwide as a means of exchange.
Hmm.
Where it is beginning to take hold is in literally third world countries where people don't like the banks. And
Mm,
so they're using digital wallets instead
hmm,
to accept payment and to make payment.
hmm.
And that way they stay outside of their own banking system by using Bitcoin, et cetera. So uh, that's, I think, where you're starting to get true underlying supply and demand for crypto in general. And as that expands, I would expect crypto to take on more normal financial market characteristics,
Mm,
which is to say less volatility,
hmm.
you know, no 50% drops over 3 months simply because the bloom was off the rose,
Because
you know?
someone went on Twitter and said something the wrong way, right?
Yeah. Oh, Alejandra, I have a great book. Can I show you this book real quick?
Of course, show
Can I
me.
show you something?
Yes.
Okay. Extraordinary Popular Delusions and the Madness of Crowds.
Crowds.
Okay. This is one of the best books for investors to read that is about manias in investing. Literally going back to tulip bulbs in Holland in the 1600s,
Okay.
which
Wow.
were like crypto of their time. People were
Okay.
growing tulip bulbs because they became currency. And there was no underlying economic nature to it. There was no income stream from it, no, inherent growth,
Yeah.
well, other than a tulip growing.
Yeah.
But there was nothing that you would say this has economic fundamentals to it, like you would have with a stock or a bond,
Hmm.
and or a piece of real estate that has cash flow.
Hmm.
So you know, it's a great book for people to get perspective about times like this and what crypto has been. Crypto has more potential than many manias, especially now with President Trump pushing it. And as I said, adoption of it, of Bitcoin and digital wallets and the like in third world countries, that is beginning to create a true underlying market. But other than that, I mean, for the first 8+ years of its existence, from my perspective, it went up because it went up. It went down because it went down. There was no reason other than the fad of the moment, you know. And I told my son that, and he still lost money in it. So
Can you? Oh no. Can
yeah,
you share the title of the book again?
yeah. Can
It's
you read it, or
extraordinary.
is it backwards?
wait, it's a little blurry. Extraordinary,
Oh,
uh, yeah, extraordinary
popular
popular
delusions
delusions and the
and
madness
the
of crowds.
madness of crowds.
Okay,
Yeah. Martin
um,
Friedson.
Martin Fritzen. All right, I can't
Yeah.
believe that there's a book about that happened something in the way back in the day that is actually mirroring what's happening right now.
Well,
That's
and this
great.
is a 30-year-old book. There's nothing about crypto in it.
Yeah, nothing. Yeah, but
I
it's
mean,
just.
I kept the book because it's great from a financial advisor's standpoint. Like the dot-com bubble.
Hmm.
You're pretty young. You may not even remember the dot-com bubble, but in 1999 and 2000, there were stocks that had no business being multi-billion dollar company values stocks. And
Hmm.
eventually, valuation came back into favor, and these
Yes.
things plummeted 50, 70% in the space of 6 or 9 months of 2000, starting around August of 2000. And, it was a bloodbath. And it took 13 years for the S&P 500 to get back to where it had been. But it was a mania. 1999, 1998, the markets were up 50, 75% in these stocks and per year. And, it was just unsustainable because there was no economic underpinning for it. And, I'm hopeful that crypto will continue to get adoption because I've bought some people some crypto now.
So basically, adoption is key, right? When it comes to any new investment tool, right? Like if it's adopted by the government or a society, or it basically is the path for some stability, financial stability.
Yes. Otherwise, it's
Yeah.
just a thing.
Otherwise, it's just a thing.
It's just a
Correct.
thing that people want to
Hmm.
buy and other people want to
Yeah.
sell sometimes.
And
That's
it's so
all.
speculative. Yeah. I do know that people tell me, if I miss out on crypto, remember that .com, and if people that invested back then is the people that are millionaires now, and if I miss out on this, then it's going to be the same, event as the .com. So that's what people speculate on, and that's why they invest in crypto.
For everyone who became a millionaire, there are probably 5 people who went bankrupt.
Hmm.
Um, and there is a dynamic that I've noticed among clients and or the general public when they talk about investing. They're always happy to talk about something that worked out, and they rarely bring up all the things that didn't work out. And so, most stock market investing from financial advisors is broad-based, diversified portfolios
Hmm.
where you're bringing the risk down to market risk
Hmm.
rather than individual stock sector risk, industry risk, things like that. Um, and so, and quite frankly, risk management is a big part of what people like me are about. I literally am just finishing a book on this topic.
Hmm.
Um, so, you know, people are unaware of the levels of risk sometimes that they are undertaking in the name of a big hit,
Hmm.
the potential for a big hit.
Hmm.
By the way, there's nothing wrong with just working hard, saving money, investing wisely, and being able to retire without worrying about going bankrupt somewhere along the way.
Yeah. Yes. What kind of stocks are you betting your money on right now?
Well, I'm less an individual stock person. I'm more
Hmm.
of a broad-based
Hmm.
market guy.
Hmm.
The large cap tech stocks have been and continue to be the place where most money is being made. So for my clients, the concentration is there. You can add some AI type stocks and some cybersecurity type stocks to that, and you know maybe a little bit of international and small cap and other things, but those small caps have not performed well for over 10 years at this point. And I have a quick theory about why that is the case. Normally, they perform well when you come out of a recessionary period. Over long periods of time, they usually outperform large company stocks The theory being you're taking more risk, so you should get more reward, and that's how it always happened.
Mhm.
I think that with the advent of private equity in the financial markets in the last 10, 15 years, small company stocks, small company stocks tend to get snapped up and taken private again, where they are then mixed with other companies in synergistic combinations by private equity investors, grown, to mid cap or large cap companies, and then they take them public again at that point. So what's left in the small cap market to invest in is sort of the dregs. It's the stuff that isn't worth private equity guys taking. And I think that's the reason why small company stocks simply have, I mean, they've underperformed by 40%. Like, they've returned in the last 10 years 60% of what the large cap stocks have returned. So it's just a huge disparity, and it's hard to justify putting small cap stocks in for people, despite the historical notion that they outperform over long periods of time. So just to finish the answer for you, yeah, large cap growth, large cap blend, tech type things. We're in a revolutionary time period. We're moving from an industrial society to a technological society. AI is the next leap forward of that. And so the greatest growth is happening in those places right now, and that's reflected in the stock market prices.
So I read this Q2 2025. There was more capex on AI that exceeded the total U.S. consumer spending. What do you think about that?
Nothing would surprise me, at least with claims about AI. My son, the one who lost a little bit of money, happens to work for Google, and he's familiar with the AI stuff going on. And he will always remind me, AI is not AI. It's actually what's called machine learning.
Mm-hmm.
We don't actually have computers thinking for themselves yet. We have them following programs and algorithms that we've taught them how to do.
Mm-hmm.
And these programs and algorithms are more powerful than they were in the past, which is why they need so much more computing power
Mm-hmm.
and so much more energy than they needed in the past. And nano computers are coming, and all of these developments that we're right on the cusp of. But AI. Here's the weird thing I have found about AI. As an example, I recently said to a well-known AI interface, okay, draft me an email I can send to clients as a market update for financial markets for the past 7 days, 5 business days. And it drafted a beautiful letter, but the events that it pointed to had not actually happened. I mean, it made up the events, and it looked beautiful. A very professional, crisp, well-written email. But it didn't point to, for example, the producer price index was released Thursday morning and was up 2.2% over the month before. It came up with something completely that had not happened for the week. So the one thing people have to be very careful about with AI, if you're looking for factual stuff, Google search is probably better. If you're looking for something to create something out of nothing, like, create a format for me to make a presentation to a client of a financial plan, just for the sake of argument. It'll do a fantastic job in milliseconds of doing that for you. But you're going to fill in the content eventually later on. So, AI's, it's really going to be amazing what happens with it. But right now, it's not exactly what people think it is. And that's a little troubling.
Hmm. I also agree with you because when it comes to putting in the AI chat box, things to search for me, I have to double check again with Google just because it
Yeah.
has given me wrong information before.
Yeah. Well, there's a famous story about some lawyers who had AI draft a brief for them. And they gave it to the judge, thinking, this is great. We didn't have to do nearly the amount of work. And when the judge's clerk checked, the cases that were quoted, the cases were fictitious. They didn't exist.
Wow.
And those guys lost their jobs. I don't know if they were disbarred. Probably not, because it wasn't intentional. But, they lost their jobs because they hadn't checked themselves.
So this is real life story you're telling me.
Yeah, that's a real life story.
Wow.
Now, that might have been a year and a half ago. Maybe things are more accurate and truthful now. They're more, Google aligned, if you will, Google search aligned with
Yeah.
factual information, as opposed to just writing a great brief. It wrote a great brief, a compelling brief. It just made it up, though. I can do that. I took a class in rhetoric. I can make a compelling argument.
Wow. Yeah, be careful with AI. Absolutely. I love
Yeah.
AI for like grammar, send it for grammar
Yeah.
stuff or tone of voice stuff. I love that. Takes away some of them when you're writing stuff. Um, or like I don't know. There's a lot of different things that AI can do. Presentations now apparently they do. Like you
Yeah.
upload something and then it creates like a whole presentation for
Yeah.
you.
You
So
could
that's
put in
cool.
color schemes and logos and things like that.
Hmm.
And phew,
I
it's
like to
really
create
wonderful for that.
logos from it as well because that's easy. You don't
Yeah.
want to, instead of paying someone, just like do this logo for me. So it's cool. It saves you time and money and in a few things. So that's and it's people say AI is going to replace jobs, but I don't think so. I don't think we're there yet. I don't think we're
Yeah.
there yet.
Although logo designers are apparently having trouble now, by your
I
own admission.
I still need them though. Okay, so it gives me a nice one logo piece, and I still have to go to a logo designer to recreate it and do it more professionally.
Yeah.
So at some point, you still have to go to see them.
Yeah. Well, I think it can give you a good start,
Yeah,
some visual concepts that you can take to a professional and work with.
yeah, correct. Yeah, yeah. At least you have an idea there. Okay, so going to the exit part of things,
Yeah.
have you seen, I mean, you being in those transactions, have you noticed in how owners struggle with their identity shift after exiting and how they struggle with managing their wealth outside of the whole business context? Is there any advice that you can give to business owners that you're giving your clients now with this
Well,
transaction?
yeah, I have a couple of thoughts about it. As to the emotional or psychological part, I think that varies by how badly the person wants to make a change in their life, right? If the monetization event is happening at the peak of a company's earnings and revenues and everything else, and things are going great, but you're just taking advantage of the timing, but you love what you do, I think it's a lot harder to step away from that.
Hmm. Yeah.
Uh, if you're like me and you're, 40 years at doing something and looking for some sort of a change in your life, I think it's a lot easier psychologically to make the leap to the next thing.
Hmm.
And there are professionals who help counsel people exactly through these situations. But yes, I've seen it. As to the investment part, I have seen people be paralyzed by financial assets that they got from a sale in a way that the value of their company never paralyzed them. In other words, they understood their business and their markets and how things worked so well. But once it came time to trust in financial assets now to take care of them for the rest of their life rather than the business, there can be literally paralysis for them, um, where they have fear of making mistakes with it because they're just not entirely sure. And this is where you end up with, 2 or 3 different investment advisors working for somebody simultaneously because the client doesn't want to risk one person getting it all wrong. And that can be a big messy kind of situation because they're often working at cross purposes. There's not a cohesive strategy to the entire thing. It's like having 3 architects designing your house.
Hmm.
You're going to get 3 different looking houses, parts of houses anyway, you know.
And I think that goes back the way you're saying it to me. Would it be that business owners have control over their business more than, externally? So they're so afraid of, like, I'm gonna rely on this whole external investment that I have no control over, rather than, something that you really control 100%.
Yeah, I think it's a control issue in part. I think it's just a comfort and informational
Mm,
thing in
mhm,
part. I think we're always a little fearful of something, especially
mhm,
something so monumental that we don't have a lot of experience with,
mhm,
that
mhm,
that we haven't mastered somehow, or
mhm,
uh, business owners feel like they've mastered their business. They understand exactly how everything works and what will work, what won't work. Um, but they talk to an investment person like me, and they could have all the confidence in the world in a guy like me, but at the same time be like, yeah, but what if he's wrong?
mhm,
Is this, to what degree is this subjective? To what degree is this risky? Am I being shown something that's risky that I don't understand? And yeah, I can tell you, for me, I try to spend a lot of time explaining risk to people because it's risk that scares people. It's not
mhm,
potential reward that scares. Everybody
mhm.
understands potential reward.
Yeah.
you know, it's risk, especially when you've built a legacy, have
Mhm,
finally monetized it, and have it, in a bank account now instead
mhm,
of in just an amorphous company stock value.
mhm,
Um, and all of a sudden, it's reality hits. I could make a mistake here and blow my legacy. So they have to have a lot of confidence in that person. And for me, I believe that confidence is built by helping them to understand risks,
mhm,
helping them to understand strategies that overcome risk, including market risk at the end of the day. Um, I deal in something that is known as structured positions, which are uh, bond and option combinations that replicate stock-like positions, but with a lot less risk, and in some cases, better returns than indices because of the costs of the options versus the bonds. So, um, at the higher end of things, there are, you know, the wealthy people always get some advantage, right? There's always something available to them that isn't available to everybody else, and so, but there are things you can do to even manage market risk that can, take down the risk of loss. So, some people are roll the dice type people, but most people, in my experience, when they've been fortunate enough to monetize, the number one thing they're trying to do is not blow it, with
mhm,
speculation,
mhm.
ton of crypto,
Yeah.
or the riskier types of things. They want more preservation, or lower than market risk kind of stuff to the maximum degree possible, consistent with still getting market like returns. So that's the strategies for that are different from just buying some mutual funds or ETFs and holding on to them.
Mhm. So, what would be the first thing? Because I know you're writing a book, right, about risk management, correct?
Yeah. Yep.
Okay. So, what would be something that owners can do right now to start to manage their risk better when it comes to personal finances?
Well, number one, diversify.
Hmm. Obviously,
Buying
yes.
5 stocks is
Yeah.
not a portfolio.
Hmm.
And in fact, you probably should have 8 or 10 funds of various types with little crossover among them, so that you might have 80 or 100 stocks chosen by professionals, whether it's an ETF or a no-load mutual fund, I don't care either way. But you should have diversification across some asset classes and across sectors, and not be concentrated, for example, 100% of your money in crypto, 100% of your money in AI, simply because you think that's where the biggest return will be.
Mhm.
Wherever
Mhm.
there is the biggest return, in theory, there's also the biggest potential loss.
Mhm.
So if you're looking for risk management and protection of principal to the maximum degree possible, diversification is step one. And reducing business risk, credit risk, default risks, political risk, currency risk, all of those you want to try to reduce as much as possible. And then you come down to market risk. And, there are, again, as I said earlier, there are things that you can do to reduce the market risk as well.
Mhm.
So learn about these strategies, I would say first. If you're going to be a do-it-yourselfer, you want to understand this stuff before you go putting your hard-earned legacy,
Mhm.
into the wrong things and
Mhm.
taking too much risk with it. So,
Yeah, I mean, risk management is one of the topics that a lot of business owners don't really think about, right? That's why we have a job.
well, a lot of people don't even know there is such a thing as risk management when it comes to investing. They think of it as insurance,
Yeah.
you know?
Yeah. I mean, I deal with the business risk a lot. So how do we reduce that risk, right?
Hmm.
Um, and it's just interesting to me that even that risk is also not something that people know about a lot.
Yeah.
So like they go to AI and get contracts, right? Like going back to AI rather than going to a lot. You see what I'm saying, right?
Yes.
And getting real contracts. What mistakes have you seen that people do after a liquidity event of like going on an exit with their money? You blow
Uh,
it up.
you know, it's not so much mistakes as it is, again, the sort of paralysis
Mhm.
that I see. Most of what I've seen is more that it takes them a long time to get comfortable with things. So money ends up sitting in money markets and CDs and bank accounts and things like that. That may be different if they have a long-standing relationship of trust and confidence in some kind of an advisor,
Mhm.
uh, and or their own knowledge, their own abilities. But it's the kinds of mistakes, just to go back to it, are not appreciating the risks of various types of instruments, of various
Mhm.
types of securities.
Mhm.
What are the risks of crypto? Well, one of the risks is theoretically 100% loss of your money.
Mhm.
The S&P 500 index fund, short of global Armageddon, there's probably not risk of loss of 100% of your money. But when you get into something like crypto, the whole, something could change, something else could come along that, outdoes crypto as a digital currency of some kind.
Mhm.
And all of a sudden, Bitcoin has no value.
Mhm.
You buy it for $100,000, and next thing you know, it's zero. So, not speculating, understanding risks. Um, uh, uh, don't don't think in terms of big wins. Your sale of your company was your big win. Think now in terms of preservation and
Mhm.
making this money last.
Mhm.
That would, that's the way of thinking that I see as more successful, I would say,
Mhm.
among entrepreneurs.
Yeah. Yeah, I love that you said perseverance right now. Preserve your wealth, your legacy, your hard-earned money, time. The big win was the huge exit, which was great, right? And now
Yeah.
it's like, how do we
You
preserve
don't have
that?
to average 20% per year returns to be financially independent. And by the way, one of the great things that a financial planner can do for such a person is to calculate for them and show them,
Hmm.
look, if you make 2% a year on your money, you have so much money. If you just make 2% a year on it, you'll have more than enough money to retire and be financially independent till you're 95 years old.
Mhm.
Now, if you take a third of your money off the top, you need to make 4.5% on the balance.
Mhm.
So take a third of the money and blow it for all we care. Doesn't matter. As long as we get you 4-5% on the balance,
Mhm.
you'll still be financially independent. But knowing those kinds of parameters, I think, is really important to help people make decisions when they're at that point about risk and quite frankly, about alternative investing. Like, do I want to put money into private equity deals of some kind?
Mhm.
If I have 20 million, if I can afford to put 4 million in some things that are seeding good
Mhm.
opportunities, and I lose it all, if I can still be financially independent, it would be painful, but it
Mhm.
doesn't change what I've spent my life building and my ability to be financially independent.
Mhm.
So, I think that thinking that way and analyzing it that way, uh, or not analyzing it that way, is a mistake that people make because they think I've got a lot of money. I must
Mhm.
have a ton more than I need. So if I blow 5 million, that's fine, without
Mhm.
realizing that they really can't afford to blow 5 million because of
Mhm.
inflation over between the time they're
Mhm.
57 and they're
Mhm.
90 years old. Inflation triples or doubles at
Mhm.
least the need
Mhm.
in that kind of a time frame. So those kinds of things, very frustrating for people like me to see people behave in certain ways, knowing that there's such a better way that would uh, inform them and give them frameworks to make
Mhm.
good decisions.
Mhm. I love that you said that because it definitely is all about the mindset too that people have to work on. And the big piece that's missing is the educational part and the awareness part. Because
Yeah.
I have to deal with that as well when it comes to the exit planning side of the business. People are like, well, I can sell it for like 10 million. And then we start looking and doing the numbers and we're like, you can sell this for way less than 10 million. So
Mm.
if you want to get to 10 million, what do we need to do to get to 10 million, right?
Yep.
Which is kind of like the value gap of the business. And then you deal with the wealth gap, basically. Like if you want to retire with
Right.
10 million, how do we get you to 10 million where you are right now?
Yeah.
This, I love it. I love it. I love calculating those gaps though, because it really gives people perspective, right? And clarity on like, oh, this is where we are and this is where we need to be.
Yes. Yes. Yeah.
Um,
But that's critical
yeah,
to making
that's
good
pretty.
decisions. You got to
Hmm.
know you can't find a path to anywhere if you don't know where you are now.
Yeah,
So
yeah,
it's just common sense from my standpoint.
yeah. How many years do you think, do you suggest, you advise business owners to start working with a financial advisor before the exit? I know you said like at least a couple of years, but I think it's way more than that, right?
Uh, Ideally, 5 years, I think, is critical. So I would say you should be working with an experienced financial planner or an
Hmm.
experienced tax
Hmm.
accountant, experienced tax attorney, people
Hmm.
who have dealt in transactions like this
Hmm.
for minimum 3 years, ideally
Hmm.
more like 5 years,
Okay.
just so that you have covered
Mhm.
yourself for any potential buyer. Because nobody really, if somebody were to ask for more than 5 years, frankly, I would tell them to pound salt.
Mhm.
5 years is more than enough time to properly
Yes,
analyze it.
100%. So like I work with businesses that are ready to sell in like 3 years.
Yeah,
And that's basically the average, I would say, that's going around because businesses don't really want to make an exit decision after like 5 years beforehand. They don't really think like that. It's something that
yeah,
I'm bringing awareness at. Like you need to build with the exit in mind, scale with the exit in mind from inception, not really when you decide to sell your business, because that's when you're really too late.
yeah.
But because of that, like you said, so you're basically saying as soon as you make that decision, you need to start working with a financial advisor as well, to get your ducks in a row with personal finances. Because if you wait too long, then you're probably going to end up paying more taxes on the event, or you're
More
probably
taxes, lower valuation.
lower
You
valuation,
know,
everything. Yeah. Hmm.
yeah.
Hmm.
I,
Yeah.
I, I would
Hmm. I always say that too. Exit strategy is a business strategy. It's a business strategy that you
Yeah,
do every year. It's kind
yeah,
of like doing your goals and your roadmap. It's exactly the same thing. There's nothing really else special than that. Just basically doing a few extra steps to create more value and remove you from the business. That's basically what you're
yeah.
doing.
Especially if you want to be able to walk away,
Yeah.
you're going to have to be able to make the case that all of this can survive without you.
Mhm.
So, what is your management team,
Mhm.
or who has the relationships with clients and things like
Mhm.
that?
Mhm.
Those people will need to be retained.
Mhm.
So how are you going to, hold on to them,
Yeah.
etc.?
Mhm.
Um, it's a, you're right. A good exit plan is just a good business plan.
This is just a good
You
business
know,
plan.
yeah,
That's exactly what I say. Yeah, I'm a certified exit planner, and I know for a fact that I like to do the quarterback, is what we call it, where I bring you, and I bring a tax person, and I bring someone else, and I bring
yeah,
everybody, into the deal. Once they tell me, I think I want to go exit. Okay, so do you have a good tax person? Do you have a good financial advisor? Those are the conversations that I drive, because if they don't
yeah,
have those people, then we got to find them, basically. They're as
yeah,
essential of the transaction as the business is essential, or more, right?
yeah, yeah.
Um, yeah, so I like to say I'm a quarterback in that area, in that regard. So
Yeah, that's a great way to phrase it, I think, because it takes a team.
it takes a
Honestly,
team.
it takes a team, and I've had situations where accountant or attorney or both of an entrepreneur did not embrace me as a financial advisor because they hadn't known me, um, and I always had the feeling that I had to watch my back because the moment there was any not so great news or underperformance for a window of time or something like that, that there'd be somebody else ready to take over pretty quickly.
Oh, wow.
So the team is important, and for each member of the team to respect and to be respectful of each
Mhm,
other is
mhm,
really, really important for the
mhm,
client's sake,
mhm, mhm,
but also just for the general, uh, mindset of the individual members of the team.
mhm, mhm,
Nobody should be sitting there saying, I think this guy would try to stab me in the back and get rid of me the moment he had a chance." But stuff like that happens all the time.
mhm,
It's
mhm.
unfortunate, but it is what it is.
Yeah, we live in a world, what is it, dog eat dog world, right?
Yeah, right.
Unfortunately. Yeah. Yeah, I always like to say, I get out of the way of people, because what I'm good at, they're not good at. What they're good at, I'm not good at. So why am I getting in the way?
Yeah,
So let's work for me too. I just, keep it light and keep it going. And especially with, correct. Yeah,
yeah.
agreed. Agreed. I love that. Okay, so I'm going to ask you two personal questions just to end here on a more personal note.
Okay.
Um, First of all, if you were invited to a dinner and you would want to sit down next to someone that you've been admiring your whole life, or you have been intrigued or has some kind of impact in you, who would that be, and what would you ask them?
This is the easiest question you could give me, because the answer is Jesus.
I love
Um,
it. Yes.
I'm not a outwardly spiritual person, but I'm very inwardly spiritual. And I actually composed a musical program about the life of Jesus. And I opened the show by saying, if you could have lunch with anyone from history you wanted to, who would it be? And I said, Jesus. I said, that's my answer, is Jesus. Uh, what would I ask? I think question one would be, how am I doing? Am I am I getting it right? I think that would be question number one, and then everything else would flow from that. I guess would be, if yes, then this. If no, then that. Right?
That-
You know, it's not the same questions based on the answer.
Yeah.
So yeah, that's my answer to that for you.
I love that you said you're inwardly spirited, not outwardly spirited, because that means that you do more self reflection. than being like you sit down with yourself a lot, basically. So
Yeah.
that's really cool to know. Yeah. And I think being a business owner pushes you to be in that way too, because you have
Well, you
to.
are. I think there are such opportunities for growth or requirements for growth
Mm-hmm.
thrust upon you as an
Mm-hmm.
entrepreneur
Yeah.
that some degree of looking at yourself and saying, "Wow, I've come a long way. What has changed in me? What have I gotten
Mm-hmm.
better at? What
Mm-hmm.
how would I have handled a particular situation 5 years ago, 10 years ago versus today?" There, I may also just be at the point where self-reflection is natural. When you're
Mm-hmm.
in your 60s, you've had a lot of life to reflect upon. So I think you do more of it.
No, to be honest with you, I'm a business owner, and I've been a business owner for 5 years, way less than you, but I'm getting there anyways. But it has been the most growth period of my life. It's
Mhm.
the best personal development experience I've had. Because I've been through some ups and downs, and it really takes a certain kind of character and mind and resilient and a lot of qualities to respond a certain kind of way to what's
Yeah,
thrown at you. So
yeah.
I think that everybody should have a business at some point in their lives, even if it's just part time. I don't know, but they should have a business because it's the best.
How to maintain an even keel even though you own a business.
Yeah, correct.
I think that would be a great book, actually.
There you go.
Maybe my next one. We'll see.
That would be the next book. It's first heard from scale to exit. Next book. So
Okay.
you're gonna
Okay.
give us the opportunity to become VIP guest whenever you go to the speaking engagement. So
Oh,
that's
great. Okay.
great.
You got it.
Okay, next question is
Okay.
what do you work on to maintain mental health and personal health as a business owner yourself?
Well, I'm blessed that I have a wife who is a health and wellness coach.
Oh, I love it.
So I hear about it incessantly, as you might imagine. And that's not a negative. It's, I need it because I'm thick, you know. So I have a morning routine that includes meditation, spiritual reading,
Hmm.
something called a red light sauna,
Okay, I love it.
um, various kinds of supplements and nutritional kinds of things. My diet, I try to keep it a very healthy diet in general. Um, I've there are a lot of anxiety provoking things that happen when you own a company. So I know
Hmm.
what it is to be anxious and I know what it is to have peace of mind. And peace of mind is far better. So
Hmm.
this is all for me. This is all about maintaining calm and peace of mind during the day, despite whatever may come on a given day. So that's kind of my morning routine. Some exercise, various types on
Hmm.
probably 3 to 4 times a week. I do some walking. I do some tennis playing. I do some
Hmm.
gym,
Hmm.
weightlifting. Um, but more of it is about the mental and spiritual health for
Hmm.
me than
Hmm.
physical,
Hmm.
to be honest.
Hmm. I you touched on really good ones like the meditation one and also the peace of mind one, because we, like you said, we experience a lot of anxiety. Our nervous system is either on fight or flight or
Yes.
most of the time as a business owner, and that brings diseases, that brings a lot of bad stuff along the way. So like being that peace and regulating the nervous system, it's huge. I always
Yes.
talk about that too, so I'm really happy that you brought that into the
Yeah, I
podcast.
think that's a really critical component. Fight or flight is not a good way to live every day.
Mm-mm.
And I have lived it, unfortunately, for years in some instances. And I think it took something off my life. I'm pretty sure it did. I wonder about it sometimes. So focusing on very much inward
Mhm,
and um, joy, happiness,
mhm,
gratitude
mhm,
prayer is another part of it
mhm,
for me. Focusing on all that good and recognizing that bad's going to come. Let it slide off your back. The worst case scenario is X, and I can live
Mhm.
with that.
Mhm. Mhm.
That's kind of how I approach it,
Yeah,
you
I
know.
agree with you 100%. Yeah. I loved our conversation, Tim. Thank you so much for coming to the Scale
Oh,
to
same here.
Exit
This was fun.
podcast. This
Thank
was
you for having
fun.
me. Thank you.
Absolutely. I want to know if there's anything that I haven't asked that you would like to talk about right now.
Um, well, my investment work is a specialty of helping people reduce market risk again and get better than market returns through the use of options and fixed income instruments. It's a relatively unique area. There aren't that many people that do what I do. In fact, I have trouble finding competitors
Mm.
when I talk to people about it, when I describe what I do. And I'll give you a quick description so that you understand what I'm talking about. You know, imagine I took 75 cents of the investment dollar and I put it into bonds for you. And I take 25 cents and I buy 2 call options on the S&P 500 index for you for a particular period of time. Between now and that period of time's expiration or end, the interest from the bonds replaces the cost of the calls so that you get your money back. Generally speaking, you know you're going to get your money back if the market's flat or down modestly. If the market's down a lot, the bonds are typically down a lot less than the market. So you're not going to have full stock market risk on what you have. And if the market is up, you bought 2 calls, not one, you're going to have somewhere upwards of 2 times the market return there. So it's a lot of math, but it's really a lot of fun for me. And I love explaining it to people, and I love doing the math and creating these special situations that fit whatever an investor is trying to do. So that's something to be aware of. I did write a book about how to avoid investment advisor fraud. So, happy to put you on the list if you want
Please.
that.
Yes,
Yeah.
absolutely. Yeah.
Unfortunately, I've dealt with 3 frauds by investment advisors, not all of my company, but, cleaning up messes of other people.
Wow.
And there's a pattern that's very obvious when you look at it that exists in all 3 situations. So explaining that to people is important to me. I do something called the Financial Dad, which is financial education for young people.
I
And
love it.
so people can go to at the Financial Dad on YouTube and that's our handle. They can find us there. Lots of videos. And if anybody is looking for a show about the life of Jesus, contact me. I'm happy to bring it to you.
I love it that you have so many different passions and interests, and the podcast that you have going on YouTube is one of them. The book on letting people know about investment fraud, which is huge. I can't believe it
Yeah.
happens more often than we know it. And also that you are playing for Jesus right now. So this is great.
Yeah, but don't tell anybody.
Oh, I won't. Your secret is safe with me. Okay, don't worry. Shh.
I'm just teasing. I'm just teasing. I'm out. I'm out at this point.
Well, this has been fun and such a great conversation, Tim. I will put in the show notes all of the pieces that we talked about right now, the
Okay.
podcast and everything, and your LinkedIn as well. So that way people can connect with you. Or if there's a better way to connect with you, just send me a note if it's an email or a website that you want me to put as well. I will
Okay.
be happily do that. Yes. But
That's great.
thank you so much for coming to Scale to Exit podcast to enlighten us a lot about risk management, about where to put your money, when to start thinking about diversifying and investing before your exit, and what things to avoid and what things to do. Great conversation. And for yourself, such a great personality as well. Thank you so much for being so personable.
Well,
And for
thank you. I'm going to
everybody,
tell my
yeah.
wife you said that.
Yes. And for your great wife, you have a great wife. It's thanks to her,
I have an amazing wife. Yeah,
I love that you
she's
say
amazing.
that. I love that you say that. I always say that I work a lot with male clients, surprisingly more than with women. But I always say that the male clients that I work with have either a good relationship with their wife or their mom. because that's the ones that find me, right? The ones with
Mm,
a good relationship. I always can see that because they've been married for a long time, or they have good families and they're working with me, or they respect their mom so much. Like, okay, I attract the good kind. I love that.
yeah, yeah. My wife is one of the most competent people I know, and
Yeah,
it's pretty much what attracted me to her
yeah,
in the first
yeah,
place. You know,
yeah.
so you have two driven, crazy people just trying to get through life together.
Oh, I love that. It's a power couple. So behind the strong man, there's a stronger woman, basically. That's basically how it goes.
Does that mean
Yeah.
that behind a strong woman is a weaker man? I don't know.
No, that's no, no, no,
Might not be good.
no. You can go both ways. You can go both ways.
Okay, good.
Well, thank you so much. And for everybody that's tuning in, I will see you next time. Adios, muchachos. Hasta la vista. Bye.
Thank you.